The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello. Wonderful to be here with you on this Monday afternoon. I'm Nadine Blaney.
And I'm Tessa Ercilia. Thanks for joining us.
Yeah, I hate to say it, but did just say to Tessa that it was a bit of a nothing day out there by the end of it all. Nice to see, though, a bit of buying into the close here locally with the COB Australia Index just down now by, well, less than 0.2%, Tessa.
That's right. And I think around the same, around that price with the ASX as well, just down less than 1% over there. Now, look, Nadine, it's all about this waiting and seeing as we have a lot coming this week, right? It's a really big week. Budget, of course, is tomorrow evening, and then we've got wages data, and we've got the US CPI. So all of that weighing on the market today.
Yeah, just a little bit of trepidation, perhaps. Also, we did see oil prices lower. We saw the big miners down. So out of the sectors, 7 out of the 11 were lower. So yeah, a little bit of nuance out there, but stocks shrunk, generally speaking. Commodities were crunched across the board, and we've got these budget blues. So the government, Tessa, is saying that inflation will be returning toward the target band by the end of the year.
But it's actually in contradiction to a bit what the RBA was saying. Isn't that interesting? So they say, well, we're going to get back to the 2 to 3%, but then the RBA said that not till 2025. It's going to be interesting how that plays out.
Yeah, so lots of talk about how this will be an inflation busting budget, so giving people a bit of relief on cost of living. But and
they're still
also
aiming for
spending
surplus,
big,
aren't they?
Yeah,
tomorrow. So we'll see with that. And when you just talk about the sectors that we'll see later on, it's the commodities crunch. A lot of that probably driven by demand or lackluster global demand.
Yeah, well, we did have some inflation data out of China that didn't point to a crash hot economy there. But we've also got energy in focus today. It was the worst performing sector. So take a look at the likes of Beach and Origin. They were higher, but we've got Viva down. We should be looking at the likes of Woodside and Santos. There we go. Woodside down by 1%.
So much red. Oh gosh, yes. So energy really one of the big losers of today. Now looking at the REITs next, you've got Charterhold there down just about over 1% and Center 1.57. Do you know any news on these companies?
No.
We were looking at REITs performance today as a sector. I think they're pretty mixed.
Yeah, they're interest rate sensitive, but I was going to say I read a really great note from Macquarie today. So it says that after the Macquarie Australia conference, which was last week, and attending presentations from across the broader market, it points to the fact that it's hosted 10 groups at that conference. So it says that guidance has been raised by HomeCo, explicitly reaffirmed by Mirvac, by Dexus, and Qualitas. So yeah, it's a really, I don't know if you can get your hands on it, but a really great note coming from Macquarie about the REIT space.
All right, and utilities, one of the 4 sectors actually that are doing okay today. They're in the green. APA Group there up 0.68%, Meridian Energy up 0.18.
Yeah, and in the healthcare space as well. So what that says is those more defensive areas of the market. Let's go to Josh Gilbert. He's standing by at eToro to see what he's had his eye on today. Josh, welcome. Yeah, like a lackluster start to the week. We've got to be honest with ourselves, don't we?
Absolutely, yeah. I don't think we can put it any other way, really. I think we had a little move higher today from consumer discretionary stocks. I think that maybe comes after a bit of weakness last week. But yeah, overall, pretty lackluster. Obviously, we had some data in China as well. I think that's probably why we're seeing a bit of weakness from some of those energy names today that you sort of had up there. The PPI data was sort of worse than expected, even though inflation data sort of moved further away from deflation territory, and the activity data that we got today, I think, has put pressure on oil as well. So still, as always, as we have had over the last 12 to 18 months, question marks over China. Seems to be a sort of a broken record, really, but I think that's what's put the energy sector on the sort of the back foot today.
And Josh, what are you keeping an eye on tomorrow, especially, let's say, overall, first of all, the divergence in, it seems like, the opinion of where the interest rate, inflation rate rather, in Australia is going to be. The government have their quite optimistic view, and you've got the RBA that has a different view. Where do you stand on that?
Yeah, I mean, obviously the budget is obviously going to be the big question mark, really. I think if we have a look among some of the sort of the best or the biggest economists, if you like, across Australia, it's pretty mixed. I think, some saying it's inflationary, some saying it's going to sort of be deflationary and sort of help in some cases. So it is pretty mixed. I think the sort of the NAB business confidence survey today as well showed that I think we're sort of seeing slowing activity, maybe easing costs as well. And I think that should help in terms of the inflation outlook as well. I think, from a positive standpoint, I think what we had from the RBA last week, from Michelle Bullock, was that, she was quite happy to sort of come out and say that she believes that rates are at the correct level for inflation to sort of come under, to sort of return to target. And I think that was pretty positive, especially when so many had expected to sort of hear a more hawkish tone from the governor sort of last week as well. But yeah, look, that budget I think is going to be at the top of everyone's mind, especially when we think about tax cuts as well coming in at the start of July as well. So lots of question marks over those sort of two parts, and it's sort of really going to be a wait and see scenario, I think, until we sort of really have that handed down. We can sort of give future guidance, we can look, but unfortunately, until these measures are sort of handed down, we're really not sure how it's going to affect the sort of the broader economy. But I think looking ahead, we know we're probably not going to get rate cuts now until maybe the start of next year. So it's more of a higher for longer narrative that seems to be playing out.
Okay, so Josh, in the United States, nothing really exciting, to me at least, reporting tonight, but always at the end of the quarterly earnings season, we get the retailers coming through later this week. So the likes of Home Depot, of Walmart, for example. This is really key information for us to get on the state of the U.S. consumer this time around.
Absolutely, yeah. And we've also got retail sales coming out this week in the US as well. So again, going to be some really key data points there that we get, as you say, looking into the consumer. So far, earnings season has been, pretty good. Growth is just over 5.5%, ahead of estimates, better than many expected. We're seeing upgrades now coming through for the second quarter as well for earnings growth. Every sector is surprising ahead of analyst forecasts as well. So I think what we've seen has been enough to sort of reignite the sort of the rally that we maybe lost on the back of those sort of the pushback on rate cut expectations. So sort of earnings have sort of really come in and done the heavy lifting, I think, in the short term. But yeah, that focus does now turn to sort of those retailers. We get a better look at what we're seeing from the broader consumer, if they're still spending money. I think we had an early insight last week. I was looking at sort of some of the travel names as well. We had Airbnb, who maybe disappointed slightly on revenue guidance. So maybe we had an early insight there as to what we're sort of seeing from the consumer. Maybe they're slowing down spending in sort of certain areas, especially on the discretionary side as well. And that could really hurt some names like Home Depot, maybe not so much Walmart, but certainly going to be interesting. And then we obviously have a couple of big names in Alibaba and Tencent from China coming through as well. So yeah, overall from our view, a good earnings season so far, but we'll get a nice read on the consumer this week.
All right, and bringing that back locally, also looking at consumers, if you will, because we have wages and Australian jobs data coming out Wednesday, Thursday this week. What are you expecting from that? And where we already see retailers here taking a beating as well. So what do you expect from those data points?
Yes, I think with wages, I think we're sort of expecting that to sort of grow. I think that we'll probably see that fall in line with sort of how we've seen CPI, sort of come in above estimates, I think, over the last sort of couple of months as well. So that's expected to rise 4.3% from a year ago. So again, that's going to be another real key data point from the RBA. I think a lot of that is going to be coming from increases through the sort of the public sector as well. Maybe some easing coming from the private sector wage growth there. So, again, really, really important data points that we're sort of really going to get. And then if we look at sort of unemployment, we actually had Jerome Powell sort of saying this week when he was looking at or sort of when we had the Fed decision that ultimately suggested two paths. We was either going to be inflation moderates, regardless of what happens in the labour market, or the labour market unexpectedly weakens. and that's a reason to sort of then begin cutting rates. And I think we can maybe take a similar look here in Australia. The unemployment figures that we've had, have been pretty robust so far. We've seen employment growth still pretty strong. Yes, unemployment picked up last month, but so far it's been pretty strong. So although we're expecting to see unemployment rise to, I think, maybe 4.5% this year, and I know we had some revised targets from the RBA last week as well, I think for now we're probably going to see a labour market that's remaining pretty resilient, and will continue to show that. And it may take a couple of more months for the RBA to be convinced that we're seeing cooling in the labour market.
All right, Josh, thanks for getting us across it all on this Monday. I hope you have a good evening. We'll speak with you next week.
Thanks, Josh.
Thanks, guys. See you next week.
Josh Gilbert there from eToro. So yeah, we've got Alibaba expected to report in China. Chinese shares have been on quite the tear. You know what shares were not on a tear today? That would be ANZ. Trading ex-dividend, but a bit more to it.
Yeah, so it is, as you see, down today, trading ex-div, but also because the corporate regulator is reportedly investigating. ANZ had actually come out and said that it was under investigation for in violation of loss executing last year's 10-year Treasury bonds issuance. Now, we did get in touch with ASIC today. I hadn't gotten a response yet, but it seems that is undergoing. So you can see the stocks are down 3.4%.
Yeah, ANZ says that it's cooperating fully with the regulator. Fletcher Building was the worst performer on the 200, down by 11% after lowering its earnings guidance for FY24, pointing to a notable slowdown in house sales in New Zealand and a weaker Australian property market as well.
And that leads us nicely to our stock of the day, Fletcher Building. So we had David Lane from Ord Minnett today and Mark Moreland from Team Invest. This is what they had to say.
Our analyst does have a buy recommendation on it, but the earnings forecasts that we had were in middle of their guidance, so potentially we could see a downgrade from the analyst later on in the day. As I said, officially we've got a buy. I'd probably be leaning more towards a hold at the moment, given the uncertainty that we're seeing from the company.
And I'm just looking at their earnings. If you go back 10 years, they were 44 cents. And then last year they were 47 cents. And then in between it's up and down. The highest has been 60. So it's really sort of gone, it's been flat over the long term with a few big dips. And they got into negative in the 2018 and also 2020. So I just wouldn't be interested in it at all. I think there's way better companies to invest in.
Why change, Mark? And the guys at Team Invest, Mark Moreland there and David Lane from Ord Minnett. We're closed for business. We are the COB. Let's get across some of these leaders and laggards today. With Bapcor, interesting that it's leading the charge. Of course, it's had such a rough ride, so a little bit perhaps of a buying opportunity for some.
Yeah, and just looking at also the leaders on the ASX, you've got Bellevue Gold. We know there was an upgrade there today, and the other companies there, Helios, Super Retail, and Life 360 on the leaderboard today.
Lots of broker moves coming to play there, and Life 360, of course, was out with its quarterly on Friday, so a bit of buying after that sell-off on Friday. There's Fletcher Building, the worst performer. It's not a great position to be in on any given day.
No. And a lot of miners.
Yeah, a lot of miners. DeGrey Mining, it's got a bit of news flow around it, and it's off by 5.3%. In the small end of town, Macro Metals, Race Oncology, out by 12%. And let's see what's on the other page here with, I was wondering if some of the
producer up there. Yeah, the biggest loser at almost 11%. Omni Bridgeway, PYC Therapeutics down 9.5%.
All right, so what's happening tonight? Look, we do have some Fed speakers, Mester and Jefferson, but it is a bit of a watch and wait scenario, as we did paint with Joshua Gilbert from eToro for that inflation read coming later in the week. Even, Tessa, we've got the Fed chair, Jerome Powell, speaking on Tuesday, but many are saying it's, still not likely to be that market moving because, of course, we won't have had the inflation data. So there's speakers later in the week that they reckon will be a little bit more punchy.
And of course, what we're watching overnight also in the US would be earnings, as we already talked about earlier. But I think key data that we've discussed is inflation. Now, tomorrow, of course, the budget. budget will be out in the evening. Japan PPI will also be out, and we'll have a few quarterly reports and AGMs, as well as earnings reports. You've got Australian Agricultural Company and Meridian Energy out with theirs.
Yeah, so we get a lot of these agricultural companies reporting out of season. I think next Monday, Elders is reporting, so that will be an interesting one. Final check, shall we, of
Yes,
this market?
we
See
shall.
where we finished as the last of the day's trades rolled through.
SIBO, they're down 0.15%. And what about the ASX? ASX?
Yeah, at 7,750, so it just closed flat. So pretty flat as a pancake. Looking around the region, we do have some positivity being seen with the Hang Seng climbing above that 19,000 level. And just looking ahead to US E-minis, both the NASDAQ and S&P 500 E-minis are mildly positive at this early stage. And we've got SoftBank just breaking now, out with its results. Just as a little PS for those of you interested, trying to get it up on my screen. A net loss coming in, but the loss narrowing as compared to last year.
All right, well, that brings us to the end of the COB. Here's hoping for a more action-packed Tuesday, Nadine.
Yeah, it was a little quiet around the traps today, but look, we hope you have a really good evening, and we look forward to seeing you tomorrow morning. We're live from 9:45.
See you then.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.